Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. How's everyone doing this afternoon? Good afternoon, Davey. Good evening, Anissa. Good afternoon, Patrick. Good afternoon, everybody hiding behind the scenes that I do see. I don't know exactly who you are, but I see there's viewers out there. Hey, George, how are you doing? Hello, Amadeus. Hello, Amit. Thank you for those well wishes for everyone on it. That's very nice. All right. Hey, AP's World. Thank you for being here. Again, thank you. Even if you just want to say hello, it's nice to see people typing into the live stream chat. So, if you want to be part of this, please do consider subscribing, hitting that like button, and come back and leave a comment after it's over. That's all I really have to say. We had the Dallas Fed Manufacturing Index still in severe contraction, bounced back from the previous, which was horrible, but still in contraction. I mean, things are just giving every sign that we're tipping into a recession. We also had Fed. Did you see Fed Kashikari happy with the sell-off from the Jackson Hole event because he was not pleased with the rally after the July press conference. So happier the market is going down and getting into tighter financial conditions, stressing that no, the Fed is not kidding about continuing to raise the rates, which just tells me that the Fed put is a lot lower. Okay, so yeah, hit the like Mike button. Just hit the like button. Tomorrow we got Barkin speaking. We got more Fed speaks. I think they're just going to keep stressing. We're going to keep hiking. We're taking it above neutral, and we're leaving it there longer than everyone thinks. That's the message. Take it or leave it. We're still deciding on 50 or 75 basis points for September, but it really doesn't matter because we're hiking and we're not stopping there. Tomorrow we got Red Book 755. We got the housing price stuff, which the market's not really reacting to housing prices, so take that with a grain of salt. Consumer confidence at 9 a.m. Market might have a minor reaction to that, especially if it beats. Remember, we are going into month end, and the last 2 days of the month are the most important. We got some bottoming price action today, setting up at least for an S&P percent B buy. We got the JOLTS job openings and quits tomorrow, which are the smaller firms. We got the Dallas Fed Services Index. So let's see if the services are also still in contraction tomorrow. Then we got more Fed speak at 10 a.m. I don't know if these Fed speaks will really move the market if they're just going to keep reiterating that they're going to keep hiking and to not doubt them. S&P, your mega cap's still down. Walmart, little nice bounce. Oil strong. Oil did trigger the double bottom. I wanted to go over the intraday play on that also. Little teaching moment there. So oil was a big thing. Other stuff bounced back, but nothing major. Semis taking the shorts. Remember, we have that double top triggered. I covered that in the sector overview. Close to 75% now, still now favoring that 75 basis point hike. So the market, I think, taking things a little more seriously, and we are still in negative gamma territory. Keep in mind the gamma flips all the way back at 41.90. No earnings after that we're paying attention to, but tomorrow I would not ignore Best Buy just from a research or even if you don't trade it point of view, just from the consumer thing. Big lots will also be interesting. Those are the two things I will be checking in on. So that's where we sit with that. But 41.90, I mean, that's all the way up here. So that's essentially would have to wipe out Friday's sell-off to even get back to neutral gamma. So we can have the key still gamma-fueled rallies to the upside. Hey, Jason. No Bob today. You'll just have to have me. Thank you for being part of the chat and being part of the live stream. Really appreciate that. Bob will be on tomorrow afternoon. Hello, Options 22. Hello, Paul. Do you still think we'll get end of the month window dressing? I have a potential buy signal. If that will be actionable, I will tell you exactly what I'm looking at tomorrow and where the targets would be. So it's not yet triggered. This was a little bounce play today, filling the gap. Now we have and this is a short-term buy signal. Short term. Why? And it doesn't have to trigger tomorrow. No, we could, if we don't trigger it, the bigger pattern is the head and shoulders. The only thing that gets in the way of that is if we trigger a percent B little bounce pattern going into month end. We have to be aware of month end. But would I just randomly say, I'm just going long here without a pattern trigger? No. No. At least we got a pattern. The only thing that I do like is we got cycles still at the bottom on the daily. The weekly are still rolling over. So that could just be a short to choppy up move bounce before we get a bigger smackdown. Gaps filled and end of the day as shooting stars. Don't know what anybody's thinking going long now. That's why, again, I'm being patient. There is a long play, and I'll show you exactly how it's set up. And it's aggressive to the long side for an end of month bounce play. And then if you want to sit that out, hey, that's completely fine, because the better play, I think, if we do get the bounce, it's setting up for establishing short positions at better prices. What do you mean, oh man, no follow through to the downside? Oh, we'll get follow through to the downside. The probability state that. And then you close below 62.5, you could get a lot more probabilities. And I'm favoring these June lows to get taken out. But you don't generally go in a straight line. You can get some straight line moves. But even up or down, even on this bounce up, we did have some pausing in here. Remember, we had a whole essentially week of sideways movement before we went into the launching pad for the little run up. So you get bounces. We had a 2-day bounce, sell off. We could get another day or two bounce. You have to be nimble. You have to be nimble. Before I get to that, I just want to show you this on the crude, because this is pretty much the same way I'll be watching for the S&P. So with that crude, I said above yesterday, this morning I said I was watching above Friday's highs for the breakout to target the 200. We got the target to 200. And then let me show you this is a pattern I absolutely love. So we hit the 200, raised the stop off the breakout from Friday's highs. We had the prior resistance here that didn't trigger. It confirmed a double. Remember. Just I want to do a little teaching, because this is tactile market. So if you have the luxury to watch stuff during the day or to trade during the day. So we had the double confirm back here. Never triggered. You never got the close. So it's confirmed but not triggered. And I said I was watching on the daily. Now, as I talked about with front-running patterns, we got the break above Friday's high, running to the 200, raise the stop. Now, we broke above the highs on the 24th and the 25th, these two highs. Break above it, the pullback. Remember, I talked about the pullback moves, then the move up. So this is a way you could get in, and as long as then we get that daily close, you're in earlier. See here, pullback 15-minute rotation zone, move up. So that's what I want to so we have major resistance that confirmed a double, break, pullback, double triggered. Does that mean it has to go straight to targets? No, but now we're back above the 200, so we have key support in here against the 50. So it could backfill again, giving people another potential entry, but that's a really nice entry up against the 50. So now stop reduction 99.07. The stop out level is still, because if I'm going to list that, I have to list the stop out level. Oops. Backwards. The stop out level will be a close below 89.23 or a trade below 88.06. Why did I start off with crude? Because, yes, we have the head and shoulders. Yes, this could roll over tomorrow, take out the lows. We take out the lows. It's pretty easy continuation trade. Or if you want, we are against the 4-hour rotation zone with a rotation back down. So this is a shortable event with the highs above this bar's highs, which interesting enough is the same thing for a percent B buy. So if you're trading aggressively to the short side for these patterns to fill, then you could be short here against that 4-hour rotation zone, gap fill, and this is exactly why I got a number of questions. Why'd you leave on those prior harmonics? I said I was watching for it to return after the gap fill to that harmonic, and look at that with the 4-hour rotation zone. That's why I left them on. Because a lot of times when you slice right through them, if you're going to retest them, you'll retest that area from the other side. And we rolled over with the rotation zone. So this is another short for to get in for a break of the lows. And those targets 39.92, 39.39, 38.86. And if this was a rollover short, the stop would have to be above this high, especially since this is a percent B buy bar that has to be triggered on a daily close above this. Now, would I be waiting for a daily close above this? No. Why would I not be waiting for a daily close above this? Because we got 2 days to month end, tomorrow and the next day. And this could be a very limited bounce play. So I'd have to trade this with the break on the intraday price action, a break above there, and then roll it into a little short swing trade if that level holds. So that's why I showed that crude thing. So what's the key level I'll be watching for tomorrow? Especially, it could be traded during the European session also. I prefer it during the US session though. That would be a break above this level. Then you could wait for a retest and then a little move up into the clear path. And that would be a quick little trade to the upside. So that's why I showed that. Because that same kind of pattern that transpired in crude is the same kind of thing I will be watching for to trigger this potential percent B buy, then roll it into a short. It would roll into a short-term pattern. Now, how do you do the levels on this kind of thing? This is a great thing after I took off those other harmonics. So we have the most recent swing. Look at where the 50 to 62.5 is. Now, minor level, I'm still watching 47.7 for at least a stop raise. 47.7 to 40.85. Above there, the next target 4100 to 4112. Why 4112? It's the 50% of this sell-off with the clear path. This is a breakdown zone. This 50% is right there also. And what do I watch for a rollover play? If we can get all the way back to the neckline, between 4112 and 4138 with the neckline right in the middle. What's interesting enough, I'll just point out something else. Remember how we watched that close above the 62.5, and people ask this a lot. Well, if it closes above the 62.5, how do you deal with the bigger swing? Well, the close above the 62.5 would then favor a return. Remember, bigger swings are more important than smaller swings, but it would return to the 87.5, this 41.91 level. Remember 41.91. If I come out to the bigger swing, let's say you get a bigger rally. 41.91. Where does that sit? Right between the 50 and the 62 on the bigger thing. So if you did get, let's pretend, and I'm not saying this is going to happen. This is more of a teaching moment. Let's say you got between the 50 and 62.5. After you got that close on the shorter swing above the 62.5, you're targeting the area in here, which is the next rollover zone. Does it always work out that way? No, but a lot of times it does. So that's how you reconcile the two different swings. But for the time being, I'd focus on this shorter swing because of the clear path. Let's see what I just wanted to try to help people. And that's not just for the S&P. That's applicable to a bunch of markets, even stocks. So, you know, this is why we teach price action. Because you can apply it to the markets you're trading. Yes, some things have slightly different nuances. That's why you get familiar with what you're trading. However, the same kind of structure and the same kind of patterns play out. Let's see what Amit says. I've been making a lot of changes to our media room with the help of Best Buy. Let's say the price listed is negotiable as they are willing to bundle with discounts ranging from 10 to 15%. Well, thank you. Yeah, that's good information. And they might be actually getting up to negotiating more in the coming months. Could be a sign they are loaded with too much inventory into a consumer slowdown. So I'm expecting also with those comments, I'm expecting there to be some wonderful deals later on this year with stuff. Well, I do Ethereum. I see it might hit 1900 if the wedge play out on the 1-day chart. Well, let's jump to that real quick. We can take a look at Ethereum. Again, Ethereum might jump to 1900. You could, I mean, Ethereum also triggered pretty much this short pattern. So overall, we should see a return to the lows, but your major resistance now in Ethereum is 1723. If you are looking on this pullback swing, by the way, I would trade this one as the horizontal. If you are looking for your downside targets, this would be stuff I've been working on recently. This would be a candidate for a horizontal one. Just an FYI, if you're targeting stuff to the upside, and again, overall on crypto, I'm still very bearish. The key levels you'd be watching for on Ethereum 1726, which happens to be also the 50% retracement and this little swing high. So do not ignore 1726 and then 1802. You'd need an 1802, a close above that, then the next target would be 1955. However, I'd be watching for more of the rollover plays in this, personally. Why? Return to the weekly rotation zone, rotation back down, triggering another shorter term reversal pattern. Sorry to deviate from the normal structure. Just wanted to throw that in there. You can learn. Even if you don't trade it, you can learn from it. NASDAQ. Again, I left the levels on here. Just trying to do a lot more teaching to help people. You can see here the harmonic extensions. Remember, the harmonic extensions are always the red and green levels. A return there with the 4-hour rotation zone. Nice little rotation back down. Does this have... Yes, this has a %B buy also. Same thing as I talked about with the S&P. That would be the same way to play it. Again, not giving trading advice. Educational purposes only. The major area is 12, 8, 14 from the breakdown with the hooking over 50. I'd be watching that on a rally. And your retracements. Look at that. Look where the 50% is. Right there, right at the breakdown zone. I might edge that just because the 50 is a little lower. Might come in front of that with a stop reduction or a profit take. And then look where your daily first cross the daily rotation zone is at the 62.5. Same rules apply. Close above 62.5, 12, 9, 13. You target the 13, 1, 17. Where's 13, 117? Right between the next 50 and 62.5. Now, this is also the rollover play. So the targets to the bottom, and that would be a stop on that %B buy. So it could be a tight stop on a rollover play, just showing how it could be played. All right, little reaction, rollover play if you weren't already short from Friday or didn't want to hold through the weekend. Rollover play, look, tight stop, decent target. So your reward to risk to the downside is huge. If it comes back up, turns around, stops you out, you play the long play, to a little bounce higher into the clear path move and then reestablish a short once there's another signal at a higher level. Is there anything wrong with doing that? No. Not at all. Don't be afraid to take stops on really good reward to risk trades. Don't be afraid of that. Sometimes I'm just showing different things because we have different time frames of everybody trading here. Dow also has the same play. I don't need to go into this repeatedly, but everybody can do the same levels. Dow actually hit the first target on the head and shoulders today. And cycles at the bottom, which I haven't stressed on everything on the daily, so we could see that, a couple day pop to the upside. But I'd wait for at least that intraday break above these levels. Russell, same thing. Your Russell first target area would be about 1916. And your Russell sitting there against the 12.5% harmonic today, which held. Russell targets 1840, 1807, 1775 to the downside. Hey, International Advisor, thanks for the thumb up. Welcome to the channel. What platform can I use for future oil? You mean to trade it or to chart it? You can chart it in a bunch of stuff. I mean, as you see, you chart it in TradingView. What you can trade, if you're trading the futures, you need a futures account or something with interactive brokers, and you have to then have the future side activated. Otherwise, you have to open an account with a futures broker. And again, I don't care where anybody trades. Just choose a reputable broker. And I'd recommend if anybody wants to trade oil, focus on the micro contracts to start. The CME micro contracts. Can I look at AMD? Sure. Can I look at? Sure. I mean, first, before I do AME, hold on. Because remember, if you haven't already watched it, I don't know why you didn't watch the weekly sector overview, but we triggered the double, followed through the targets, and you should follow the SMH if you're trading semis. 217.22, 212.47, 207.72, and that takes us right back to this key 50% level. That key 50% level is from the COVID lows to the recent November highs. So do not ignore that level. Why did I point this out? Because you have the sector with a reversal pattern. Now you have AMD, which did not have a fantastic reverse. It had this little thing. This double. No, it wasn't a double. Sorry. That's why. That was not a double. I was thinking NVIDIA again. Just a breakdown. Their targets, I'm expecting lower prices just for the overall semiconductor. So the targets at downside, it's virtually hit that 88.10. If we get a little bounce to month end, I'm watching for another rollover play, 92.25 to about 93.25 for a rollover play in there. The targets at downside, my next target is 83.97. I just use 84s, but for a target intraday or a stop reduction if you're trading this from the short side, close below 84, 75, 72 to 71.60. You do have an aggressive %B buy. That would just be for a little pop. If you were trying to play that from the long side, that would just be on an intraday break back up to the 50 area potentially for a little pop going into month end. So do I think AMD will retest 80? Yes. I think it will retest those. Again, I'm long-term also bearish on the semiconductors. So do I believe it will retest these lows? Yes, I believe there'll be more downgrades and more. They've already given some guidance to the downside. Well, AMD hasn't yet. NVIDIA did. And I'm expecting things like AMD to follow over the next month. Remember, I also put on my personal Twitter feed, I always retweet stuff. So if you don't follow that, I'd recommend you following me personally. If you're interested to see, I do a lot of retweets based off stuff that catches my eye, that echoes my same mindset that I think is valuable. But this overall, we're going to see lots of, I believe, earnings revisions and downgrades or projected downgrades coming in for third quarter over the next few weeks. Oh, there we go. URA. Thank you. I was going to talk about that. I mentioned that last week. Did I not? I mentioned that. By the way, for people following along, there's more of them. The percent beat buy was this day. Broke above the, again, still recommend trading around a core position, but this was touted. They were talking uranium on CNBC this afternoon. So you're going to start getting some more retail in stuff. Closing back above the 200, I would still recommend trading this around a core position. Talked about that many times. Break above, so you had the prior resistance, 2170. Break above it, pull back, rising daily rotation zone, launch pad up. Where do we sit? These red lines, let me take off these for a second. Let me just redraw this so we see it with the change some stuff up here. Guess what the next target for me is? 2463, 2637. We are getting a little at the weekly top and the daily top, and you got some retail piling in, so would not be surprised at a pullback at all. That's why I still recommend trading around a core position. But those are my these are more of my midterm targets. Also, remember, we still have a gap fill back from the 22nd of April, right in front of that 50. Key support now coming in, 2288 area. That would be a retest of the 200 and this little breakout zone. And then your major support coming back again at 2170. So that's uranium. Don't really want to see, if you see a close back below 2116 and you're trading around the core position, I'd be then patient and be playing for another pullback. But we're getting your launch pad in, and I would not get greedy. I'd be trailing stops at this point, especially if we get follow through the next couple days. Be trailing stops and not saying this is going to the moon just yet. That's why it's handy to trade that around a core position. Mike, the Fed running off their balance sheet slowly. Who will buy the MBS and bonds as the Fed was the only buyer in the past 2 years? That's a very good question. But they're rolling off their, I mean, a lot of MBSs will just roll, stuff will roll off, but I don't know who's going to be a net buyer of that. That's going to get very interesting. I don't have an answer for you. I've thought the same thing. So stuff with the mortgage market's going to get interesting still. Is BABA more to the upside? I actually think BABA is going to test 79.85 to 73.28. We closed below 62.5. We've had that little bounce on it. This is just a mess in there. So Personally, that's what I think. I think in the short term, in the next few days, you're going to at least retest this for a gap fill. Cycles at the top on the daily and not yet at the top of the weekly, but this next rollover play is going to be substantial. And I think Bob is going to come back down to this 80 level. Just see where it ran up to. Take off a couple of these other things so we got it. Look, so couldn't even make it back to that 50 or the 200. Couldn't even get above this resistance zone. That's not bullish price action from my book. And I know we've had the Chinese audit stuff going on, but that's going to all blow up. It's just buying time. If you want to trade for oil, then you have to have as I said, a futures account. Or you have to have like an Interactive Brokers or a TD Ameritrade. Any big account that allows you to get to trade futures. Or you just open a standard futures account. Or if you want to trade oil from a stock side, I don't like it as much, but you can trade USO. Why? The price action isn't as pure. As you can see here, we had a double bottom in the futures. This was not a double bottom in the USO. So I'd do all your analysis off USO. Off of the futures, and then you'd have to execute the trade with USO. But it doesn't trade one for one. No, there's nothing wrong with holding a short. Not at all. It depends, again, on your time frame, your durations. The overall bigger play is short. And you can also do some stuff if you're trying to hold, if you're holding shorts, you get a little month-end bounce play like we outlined. You can always put on a very short-term upside hedge and just unwind it at the end of the day should the market run above those key levels. And not take your short on. Well, it depends how you're positioned and how much. Or you can say, look, let's say I'm short. I'm just going to talk futures. Let's say I'm short 10 contracts, but we're getting a little bounce play in there. I could maybe do cover 5, leave 5 on, and then reestablish those 5 higher. So, yes, the market's moving against me, but all I'm doing is playing a short-term play to the upside based off a pattern and keeping a larger-term, long-term sell on, and then looking to re-put on my position. I don't give recommendations here. If you want just a massive thing, I always like Interactive Brokers from both a stock and a future side if you want one in the end. But I have multiple accounts with multiple firms. Dream come true. MDB. We see how that holds. You can see how much I pay attention to MongoDB, but you can see the double played out. Couldn't get it back above the 200. I'd be watching if we break below 325. That's not bullish. You got earnings coming up when? 7th. That's not a double bottom. You got a lot of overhead resistance here. I'd be watching. You got some key support here. This is in no man's land right now. You break below though about 315.50, I'd be targeting the bigger pullback. Just check that again with the weekly. There's just not a great setup here. I just don't like this. It failed at the 200. Couldn't even retest it again. So could you get a bounce going into month end? Yeah, but I'd be more so watching for the bigger pullback on this thing. unless it can get back above its 200 going into earnings. Other than that, not crazy about it. AMBA. No, that's too far. It looks like too far for the double. But you got that breakdown area. Yeah, look at that right at the 37.5% harmonic. So below about 81.15. I'd be watching for a return to 50 to 62 and a half, and if that gap fill in there. Is that a double? Let's just see if it's a no. But I would use 91.60 as a target on an upside break. When are earnings on this thing? 30th? Wow, earnings tomorrow? With no definitive pattern, it would be a gamble play for me. But the key level I'd be watching is 81.15 on a break below that or a break above Friday's high. A break above Friday's high, I'd be targeting this upper area, especially right around here, about 91. A break below here, I'd just use your harmonics. 77.10 gap fill of 75.62, then 72.96. But again, there's no great pattern there, so it's a gamble play sitting right between your weekly rotation zone. Couldn't get above some major resistance here. Mike, almost a year ago, we suggested folks start looking for stops and bear trend and look at energy. That was in bullish modes. I bet you it still stands true today. I mean, the energy ETF is still in bullish mode, so you keep playing what's working. Remember? That's why I do the sector overview. It never tipped to bearish mode. That's why we look at these sectors. This has been in bullish mode actually since November of 20. Never tipped out of bullish mode. Yeah, you get pullbacks, but this didn't even tip it out of bullish mode. So you can keep looking for stocks. That's why we look at the strong and weak sectors. It's why you should watch the sector analysis. I don't just put it up there for my health. Because you want to target stuff in stronger sectors. And for shorting, you should target the weakest sectors. I think I talked a bunch about that this last weekend. Can we look at Tesla? Tesla, well, we sure did hit the 87.5 to 100%, so that worked out nicely after that nearly full gap fill. Nothing's really changed. I can flip these now. Remember when you get down between that 187.5? Especially for rules-based people, I sort of leak out a lot of rules. To the upside, though, your major resistance is now sitting at about 289.50. And then above that, 297.70. I'll be watching if we get a bounce into month end, I'll be watching for this double to still trigger. The only thing that turns it into a triple at this point is nearly back to this 306 level. So you'd have to really get a rip your face off rally. And as I said, I'd want it to close also below this 278 area with the 50. And then it's definitely playable with the next market rollover to the downside. Nothing else has really changed. Oh, it might be one of the few times I ever agree with Elon. I've talked about uranium a lot prior. I think it's a great long-term play, but I think you got to trade it around a core position. You're welcome, Amit. You're probably already gone, but you watched the replay. Thank you for being here. You're welcome, John. Chewy, Joe the market maker. Are you really a market maker, Joe? Chewy earnings coming up. What are they? Tomorrow afternoon? Yep. No great topping pattern just yet. That'd be interesting on a bounce play. You're sitting against a very key area. This little double from before played out already. Boy, it'd be nice to get a bounce on this, because then you could set up for a breakdown for a nice topping pattern. If I had to bet, I'd probably, if you were forcing me to make a bet, I'd have to bet on a beat and a slight bounce before the next rollover play. Would I be overly bullish on this long term? Personally, no. Where do we sit? I just got. See, it's still got. They still haven't been able to eke out an EPS. But to the downside, you start breaking below 37. Next target 33, 38. You close below there. You do have a pretty big gap down here, but overall, I'd be targeting a 26 area again. If you get a bounce play, I wonder where that would take it. It's still too early to put that on. This is not valid. I'm just curious. This is just my curiosity. Oh. Yeah, so if this did get a bounce and then a rollover play, I was just curious to see how these lined up, and they line up pretty perfectly. So my overall thing would be potentially short any bounces. Can't give you specific trading advice, but on any bounces, I'd be looking for the next substantial rollover play, because I bet you this thing's going to be testing the lows over the next couple months, the most recent lows. Will I please do Oxy? Cluster, yeah, the cluster held up nicely. You got you got the bullish play in oil, but Oxy's acting a little toppy with the daily and the weekly at the top. Let's check something. Against that harmonic. Would I from a longer term standpoint, I'd be watching for a pullback at this point. It's just getting overdone. If you need to play in a short term basis above 76.50, I'd be targeting 78.97. I'd be watching for the pullback into the daily rotation zone then. I can't chase this higher at this point with everything the way it is. I'd rather, if I was looking for a longer term play in this, I would rather be reestablishing something on a pullback play. And the major pullback, it probably won't get back there. But I keep an eye on support before even the gap fell about 71. Rich, thanks for being here. Strange day, all kinds of garbage stocks are green on the day. Will use the rising. The last thing I want to buy with the Fed being hawkish. There's, again, we're going to keep going into this with until it dies a slow and painful death with some of these stocks that are playing. What platform would you recommend for one-click buy, short, and close for a pre-configured lot size with good fills? Well, again, their fills are dependent on the broker. The platform, if you're talking about futures, I loved anything to do. I would just love to trade with Ninja because you can configure a lot of stuff there with Ninja Trader. So I like futures brokers that use Ninja. Again, for stocks, you can do a lot of stuff with Interactive Brokers. You're welcome, Chris. What's going on with selling another 27 million barrels out of strategic petroleum reserves last month, which would be at zero in 18 months, saying we may sell more? Do you want my conspiracy theory that I don't think is a conspiracy theory? With now I'm going to get hate from this, but from the greenheads in the current administration, they actually believe, I think they're doing good work by trying to take us out of oil. Look, let's get rid of it's inane. It's the same thing the greenheads did in Europe with putting them in this horrible position for the winter. I don't think they'll care if they run it to zero, which is idiotic because you got to run a military off of oil and everything else, which is the point of strategic petroleum reserves. I think so many people are clueless who are running at top levels in the government right now that I don't think they care. I think they want to drain the damn thing. It's absolutely absurd. Goldman's been talking up FREY. I don't trust when Goldman talks up a stock. You know what? I think this is gonna set up for some nice shorts. I think FREY would be setting up for some nice shorts. That's what I'd be looking for. Especially this. Yeah. Shorts. From my perspective, not trading advice, be looking for shorts. You have a great night too, John. Yeah, that's what you're eyeing yourself. I mean, this is actually looks like a gift to me for a potential short at some point. And I'm not just talking your bigger short. Look at the, oh boy. Oh boy. Oh boy, if this thing rolls over, I'm actually curious in this now. I don't even know I'll have to do some more to see the float and everything else in this, and the positioning. I'll have to do some more research, but the first thing that jumps out is that gap play. I bet you this is getting pumped, and there's the inside's going to been unwinding into this. So I think that's going to be a gift at least for the gap fill. Then we'll have to see for the bigger thing. I think that's going to be a gift on a break below 12 bucks. If it can be short, I don't even know if it can be properly shorted. Goldman wouldn't pump and dump, would they? No, not at all. They wouldn't give one thing to retail and be doing the other side from their own trade desk. Not saying something like they might have been accumulating down here for other plays and now needing to get out of a position, so they start pumping stuff to the retail side because it now sounds good with, oh, we're gonna, with the narrative going right now with the not Inflation Reduction Act, and we gotta buy batteries. And batteries, uh, produce batteries in this country is also going to be another big thing that's going to run into major headwinds with sourcing of materials. So I'd be, and especially with a company that doesn't make money, uh, looks to me like, how would I unwind a position? Again, I have no knowledge about this, pure speculation. I'd be, if I didn't have any scruples and had a retail side and the institutional side was already trying to get out of stuff, I'd be issuing a buy or pumping this stuff up to retail. And look at this. I mean, just look at where you're sitting. Top area, top area, top area. You think I want to be a buyer up here with this kind of chart? Not your friggin' life. Yes, the Inflation Revitalization Act. Exactly. It is a double top. I have it on the chart. This is a double top. That's why I put it up there. Not triggered. So the shorter term play would be for the gap fill. But yes, that's a bigger double top reversing this move. All right. I think we got a lot. Let me know if this was helpful. Going on a while now, but I think I was trying to teach some stuff about how you can trade intraday around and using daily signals to trade intraday, like in that S&P potential percent Bs going into month end. They don't have to trigger. And as we reviewed before, I know Rich said NQ bear flag, and I already talked about that rotation play down. And there's the flag Rich is looking at. So that flag's actually still valid. If it triggers a percent B buy, then that flag's invalidated too. So then you're going back into the thing. Overall, that's where we're looking. All right. I keep reminding myself that when the strongest forces in nature is a reversion to the mean, that is correct. So, that's also why you get things like vertical up, vertical downs. Because it's actually a revision to the mean. You're welcome, Josh. All right, everyone, have a great night. Remember, Best Buy earnings tomorrow. We got more Fed speakies tomorrow, still in negative gamma mode. We'll take our overnight price action and help fine-tune the stuff for any potential plays tomorrow and Wednesday with month end setting up. Will the forces that be keep potential dump from happening before end of month? You naturally have some upward pressure. Does it have to manifest? No. I'd say more so at quarter end. This is just month end coming out of August. So that's why it's more but we are in negative gamma, so if you can get any rally mustered and we have a clear path move. So I have to be aware of those things to the upside, that we could still get some acceleration to the upside with these factors in play. That's the only reason I'm a little hesitant about just piling on the shorts willy-nilly. With that, I will talk to everyone later. Bye for now.